Let's go through the process of setting up the Perpetual inventory system. This begins here when the user purchases advanced inventory licenses. On my profile here, as you can see, I've got 2 licenses. And if I go to my company that I have, the advanced inventory module is allocated to this company. The user then has to go to company settings, general settings, item settings. There is a new setting, use Perpetual inventory system. By default, the checkbox is set to false. What this means is the user is on periodic inventory by default. The user is still reporting their cost of sales based on purchases. If the user then wants to use the more integrated inventory system, Perpetual inventory system, they have to tick this checkbox and save. Before I leave the item settings screen, I'd like to point out a few things that we put on there with regards to item quantities falling below 0. If the user unchecks this tick box like that, and then they are also allowing use Perpetual inventory system, they get a warning that there will be discrepancies if they allow their items to go below 0. The reason being, there is always a point when the valuation report does not balance to the inventory system account because of negative quantities. So we made the user aware that this might be a problem. The same happens when the user tries to check this checkbox and they allow negative quantities. They get the same message. This message does not stop the user from going ahead with the setup. It's just a warning message. So in this case, I would say no, and I will save the screen. By saving the screen, the user is now on Perpetual inventory system. I will then explain the transactions that happens when a user checks this checkbox.
Now that the Perpetual inventory system has been set up, let's go through the changes that we made for the items. When a user adds a new item and the user is on Perpetual inventory system, we made some changes on the item account section. In the current accounting system we have, there are only 2 item accounts, that is the sales account and the purchases account. We have added 2 more accounts, inventory account and item adjustments account. We have renamed the purchases account to cost of sales / purchases. This is when a user adds a physical item. When a user adds a service item, we also made some changes on the item account section. There is a new account, service item recovery account, and it is defaulted to cost of sales / purchases - services account. But the user has got a choice to add a new service recovery account, which can be a cost of sales, normal account, or expenses account. I will show you how these accounts work in the next chapter. Let's go through the inventory opening balances and supplier document processing. This is a spaza shop with a list of items, as you can see. These items have got opening balances, quantity on hand, and cost. We have made changes on the opening balances postings. Previously, we used to have an inventory opening balance account, but I'll show you what happens now. So if user goes to the account transactions, user selects the opening balance. Opening balance has become part of inventory. And instead of posting to the opening balance for inventory, the transactions are now posted to the inventory system account, as you can see. I'll just go and add more items, item quantities, by adding a new supplier invoice. Adding more stock, running out of stock. User goes to macro, orders bathing soap. User also orders cooking oil. Also salt. So is sugar. Processes the supplier invoice. By so doing, the user is increasing the value of stock and also crediting the supplier control account. Let's see the effect of this on our reports. We go to the balance sheet as well. We check out the inventory account. We see the inventory account has been debited with the values from that supplier invoice. Just to make sure all the postings went through correctly, we can check out the account transactions report. We go and pick up the supplier invoice, review the report. So these are the postings that happened. We debited the inventory account, credited the trade payables, and debited the VAT payable account. What am I saying? With perpetual inventory, we don't update the cost of sale at the time of purchase. So in this case, only the inventory and accounts payable accounts are affected. Now that we have gone through the supplier invoices and the opening balances, it's time to sell our stock and see the effect of selling in terms of the cost of sales / purchases and the inventory account as well. Let's do this. I've got enough stock I bought from Macro. Now I'm gonna sell these items to my customer TK. I'm making a lot of money from this. Very soon I'll go back to Macro again to order more stock. That's good. I'm gonna sell 4 of those. I'm gonna do salt. Gonna sell 5. Then I post. Now let's see the postings for cost of sales / purchases as well as the inventory. I'm gonna go and check out the transactions. I'm gonna pick up the transaction type for customer invoice, text invoice. So by doing a customer invoice, I'm reducing my stock. So as you can see, I'm crediting my stock and I'm debiting my cost of sales / purchases. All the other accounts are still behaving as normal. Your sales account is being credited, your trade receivables account is being debited, and your VAT is being credited. I'm also going to show you the profit and loss account, the profit and loss report. Let's check out the cost of sales slash purchases. So we now have a new report there, the cost of sales slash purchases report on the drill down. And as you can see, I've got my items here with the invoice numbers, the quantity that I sold, and these are recorded at cost because this is a cost of sales account. We don't record the prices here. It's at an item cost. So I'm happy. All is good. My cost of sales has been treated in real time. We now have to go and check out what happens when I do an item adjustment.
So I did a count for my stock, and I found out that my bathing soap has been stolen. So I now have a few on hand. Left with 12, 6 have been stolen, and I do an item adjustment. I want to see the postings that I've just done here for item adjustments. I will go here. There is also a transaction type we added there for item adjustment transactions. I'll look for item adjustments. Then this is the transaction. I credited inventory and I debited item adjustments. I'll go to the inventory account and see the effect of this. I'll check out the inventory account just to make sure it has been updated correctly. Inventory. As you can see, I have a credit for the inventory account there, which is cool. Now I have to go and check out the income statement because item adjustments falls under the cost of sales slash purchases accounts. As you can see, it's showing on there and it's drilling down to the account transactions report.
Let's then take this time to go through the changes that we did for service items. As I said earlier, we made a change on this part here. We added an account, service item recovery account. That can be either a cost of sale or an expense. In this case, I've added an expense account, which is a normal account. Then I would save it. I'll start from a process where I actually do a supplier invoice for training. I'm getting my trainers from outside. So I will start from there. I know a lot of people won't do this process where they do a supplier invoice for service items, but I'll begin from there. Training. I need 10 hours more that I'm hiring from outside. I don't have enough trainers in my business. So I hire one at 350, 1 hour at 350 per hour. So what I then do, I then do a customer invoice. This is invoice number 4. I did customer invoices already in this company. So I'm gonna pick training. I'm gonna sell out those training hours for 400 bucks. Just gonna sell 2. What happens is I'll then go and check out the account transactions report. I'll just go and pick training. Training is linked to my item account, so there should be some postings that have been done to the training account. So when I did the supplier invoice, training has been debited by this amount. When I did a customer invoice, training was credited. So this account stands in there like an inventory system account, but this time it is for a service item. So instead of a service item posting to inventory account, I've told the system that rather use this expense account. So exactly what it does on the physical inventory side, where it posts to your inventory account, the difference here is just that instead of posting to the inventory account, my postings are now being redirected to this expense account that I've selected. When the user goes to the profit and loss report, the user expects to see that account for training. As you can see, training is here with the transactions that I showed you earlier, but there should also be a cost of sale leg to this transaction. When the user did a sale, there is the other leg to the transaction. I'm looking for invoice 4. So as you can see, when the sale was done, the training account was credited, and then the cost of sales / purchases account was debited. So the user is actually reporting their cost of sales / purchases in this account. Cost of sales / purchases report, as you can see. Then the question will be, okay, so what's the use of the cost of sales / purchases services? This takes place, this posting happens just like what happens here on the training account. But when the user selects the cost of sales / purchases services account instead of the training account, then those accounts or those postings, they go to that report, to that account. As you can see, my invoice 2, 3, and my supplier invoices, they went to that account. Is when the user selects is when the user selects the service, the cost of sales / purchases for services in this category. But the same still happens when the user does a customer invoice. It does credit that account and debit the cost of sales purchases account.